Hey everybody, Real Estate Ninja here. I hope you're doing great. Got a great story out of the Washington Post, and it embodies what is happening right here, right now. And it's entitled "A Problem for the Housing Market. People Won't Quit Their Cheap Mortgages." And it is so true. Literally merely a year and a half ago, people were getting mortgages with good credit in the 3% range, and now they're sitting at over 6%. It's absolutely a massive, massive change in the housing market. And quite frankly, this makes what happened in the early 2000s look like a joke. We did not see home mortgage rates double in literally a mere year and a half. It has never happened this fast where we have went from X and then X times 2. This is wild. And so if you think about it, this is already worse than what we were experiencing back in 2005, 2006, where all of a sudden the housing market froze, the velocity of transactions literally fell off a cliff, stopped, and everybody waited to see what happened. And inevitably, the economy crashed. Well, that is happening right now, but it's on hyperdrive. And the one thing that we have today that we are dealing with, the Federal Reserve is dealing with, the government's dealing with, unlike what we were not dealing with back in 2006, 2005, or any of those years prior to that, was inflation. We had inflation, but nothing like we're seeing now. Literally an out of control scenario with inflation, and the government and the Federal Reserve are trying to figure out ways to deal with it, but they're gonna find themselves running up against a brick wall. And now we have this phenomenon where people can't move. So I want to go through this story because I think it's very interesting, and it's great to concrete your thoughts of the economy, of the market, and where the real estate market is headed. This is such an easy way to make money, but it takes patience, it takes a lot of planning, and certain steps need to be put in place by you to be able to take advantage of this crash. I outlined this in the crash course, real estate crash course. If you want, I'll put a 70% off link down below. All right, here we go. Again, the title of the story out of the Washington Post: "A Problem for the Housing Market. People Won't Quit Their Cheap Mortgages." It says, when Colleen Randall bought her house in 2016 for $174,000, she figured it was the perfect starter home. Then the past few years made the deal even sweeter. She doubled the square footage after redoing her unfinished basement. Now the 3-bedroom, 3-bath house in Maryland is worth $260,000 minimum. Refinancing in 2020 also lowered her rate from 3.25% to 2.75% and knocked off her private mortgage insurance. And that's the problem. Colleen Randall's 33 years old, and her husband want to have a second child, but their 3rd bedroom is a sunroom and wouldn't work for the new baby. They would normally just look to move and sell to someone else looking for a first home, but they can't imagine giving up their ultra low rate for a new mortgage above 6% on a bigger house. The more likely scenario, having another kid and stay put. Here's a great quote from her. "My mortgage payment would essentially double if we purchased a house with around the same square footage, with just a better layout." Randall said, "I just can't do it. If I could predict the future, we're probably going to have to stay where we are. It's just too comfortable of a position." And that's the problem. So many people around the country are faced with this literal scenario. You literally could not sell your house, like for, let's say, $300,000, $400,000, $500,000, and buy the next door house for the same price because you simply cannot cope with the higher mortgage rate, the higher taxes, and now comes along with higher insurance, because right when you start to insure the house and it's an immediate, it's just, oh man, it's this much. It's more expensive, right, to replace that house, as opposed to if you started the policy a couple years ago. Yeah, they raised the rates, but very incrementally. So the homeowner is now faced with a massive, well, it's not even a big decision, actually. It's easy. I can't go anywhere. And this is exactly what happened in 2004 to 2006. But let's really focus on 2005 to 2006, because in 2003, the Fed started raising rates. But again, it was very small, these incremental raises, right? Nothing like what we saw in the last year and a half. So now they're locking down the nation, all right? So the velocity of transactions is slowing. Here's the thing. People still need to sell. People are dying and their kids don't want to deal with their house, they need to sell. People are getting unemployed. They're literally getting laid off, so they have to leave the area to go find a job. A bunch of remote workers right now are being told, hey, you got to come back to work. And they're like, we moved hours away and thought this was going to last forever, but it isn't. And so you are going to see, especially coming into this fall, an opportunity where the velocity of transactions is going to start picking up. Why? Because people are going to be forced to sell their homes. And that is exactly what happened in 2008, but on a much lesser scale, because in 2008, people started losing their homes, all right? So a lot of things are happening. Now it says people like the Randalls are everywhere and they're causing unanticipated problems to the housing market. The home values soared in the past few years as the pandemic reshuffled people's housing needs and buyers clamored for the fewer listings available. To cool that demand and tame the inflation throughout the economy, the Federal Reserve has been hiking interest rates, like we've said. But those increases are also discouraging owners from putting their homes on the market and forfeiting the low rates at which they borrowed money before last year. And that is cutting down on the supply of houses, especially for conventional starter homes that have long helped first-time buyers gain a foothold in the market. Now, we're seeing a lot of interesting things happening in the market, like the government's out there now penalizing the people that have good credit scores as opposed to the ones that have bad credit scores. Well, I'll tell you this. The velocity of transactions that have stopped with the people with good credit scores. Why? Because they're thinking rationally, like Colleen here in this story. She's saying, hey, why would I leave? Because I want to have a child and I'm going to go and need a home that's bigger and more suitable for multiple children. But you know what, I can't afford it, so I'm gonna hold off on having the child. Well, that's a rational thought, right? Those are rational thinkers. Okay, well, stand by. And obviously, Colleen has a very good credit score. To get 2.75% fixed rate mortgage, 30-year fixed, you would have had to have been the cream of the crop back at the bottom, okay? So that's awesome for Colleen, but she's a rational thinker. So now the government's out there going, hey, we're gonna help people that have poor credit scores. So these are irrational thinkers. These are people that buy things that they can't afford. They buy things really quickly. They can't help themselves, and they don't think about the end result being the payments, like what we're seeing in the auto industry right now, with multiple car payments being over $1,000 a month, where we know the average paycheck of the country cannot support that, right? So what's happening? Massive repos around the world or around the country. So what does the government do? We got an idea. Let's try and spur housing by giving the people that don't think very clearly literally a loaded weapon, and that's a mortgage, right? A mortgage that within 90 days, they're more than likely going to default on. But guess what? That very similar thing happened back in 2006 when you started seeing negative amortization loans. Hey, don't worry, you can't pay the payment, don't pay the interest. We'll just stack it on the back end of the loan. It's all good. And you see how that came out. The point being is that this is a loaded weapon right now when put in the wrong hands. You could either use it for good or you can use it for bad. And the point is, what are you going to do? Look, the point is that right now is the most amazing opportunity to get ready for this, but you have to be thinking clearly. You have to take certain steps to prepare yourself to have the right proper entity, to have cash in the bank. I could go on and on. I've got a course for that. I'll put a link down below for it. My point being is that these are the days to get ready. Don't get discouraged because it seems like things are not working out the way you want. You should get excited because pretty soon, if you're prepared, you're gonna have more real estate than you've ever imagined before. All right, guys, that being said, I thank you so much for watching. Thank you for sharing the videos. This is Real Estate Ninja, and I'm out.